Rob Henderson, Chief Markets Economist at National Australia Bank, joins us live from Sydney. And Rob, let's touch on the trade balance numbers first off, because that was pretty disappointing, worse than expected. And people are thinking, how can Gillard and her government bring the budget into surplus?
Well, look, the trade deficit was actually a little worse than expected. It wasn't too bad. The market was looking for 1.3 billion, but the thing came in at around about 1.59 billion, Susan. So it definitely was worse. And the interesting thing is it was caused by stronger imports. Imports were up by 5%, which more than offset a more modest increase in exports of 2%. So, you can get a few hints about what's happening around the region as a result of those exports figures. We saw better exports of thermal coal, so that's used in electricity generation, but we saw weaker exports in volumes of iron ore and also of coal, hard coking coal. So those things are in steel making. So it looks to me like, we're getting a regional effect here of a bit of slowdown in terms of steel production.
Okay, well, talk to me then about GDP forecast, because the Australian government is basing it on their expectations of GDP growth this year of 3.25%. Is that pretty much in line with your expectations as well?
Pretty much in line with our expectations. I mean, it's pretty clear that the first 6 months of, or the last 6 months, the first 3 months of this year and the last 3 months of last year, there's been a slowing in domestic demand. It's not disastrous. The long-run trend rate in Australia, Susan's around 3 to 3.25%. We're probably travelling more. Our own business survey that we released yesterday suggests at the moment the economy is travelling about 2 3/4, and I expect the government will have a number around 2 3/4, 3% for the coming financial year, and that, of course, will underpin some further growth in revenue for the budget.
Yeah, well, the big fireworks are later on this evening for you in Australia, later on this afternoon for us here in Hong Kong. That is a big budget coming from Julia Gillard and her cabinet. Do you think they're going to be able to bring the budget back into surplus, given the trade deficit we just talked about? And, it's a big swing from a year ago when we saw a $41 billion deficit, by the way.
Well, look, I think that the truth of the matter is that they actually have had to do some hard work to get this budget into surplus for the coming year, 2012-13. The Treasurer has been promising this, of course, for a couple of years, and it's become a real political hot potato here in Australia.
Yeah.
So I don't think they have any choice but to come up with a small surplus. But we're only looking at about 1.5 billion, but they will actually have to work pretty hard in order to get that number, I think, Susan.
Yeah, that's right. They have to cut out a lot of outlays and spending into the economy. So is this the right course of action from Gillard, from Wayne Swan, the Treasurer? Basically, it seems like they're ramming it down the throat of Australia.
Well, look, I mean, in some ways, I personally can't see the need to push the budget over into a small surplus if the reason why you're not getting the surplus you previously budgeted for is because growth's a bit weaker. But politically, I don't think they've got any choice. And there's been a lot of leaks now. I just saw an article this morning from some political commentators out of Canberra suggesting that more than 30 items of tonight's budget's already been leaked. But the really big ones are cuts in defence spending and also cuts in the public service. There's also going to be pretty much certainly some reduction in superannuation concessions for voluntary contributions and also some tightening up on welfare payments, Susan.
Yeah, okay, well, if we're going to cut government spending, right, and you have slowing growth in Australia, doesn't that mean that the RBA also has to play a part? I mean, don't they need to move in and cut interest rates even further?
Well, it's a bit ironic, isn't it? Because normally you would expect both arms of policy to be working for the same end. So you'd expect in a weakened economy that you'd see looser monetary policy and looser fiscal policy. But actually it looks like we've got discretionary tightening of fiscal policy going to be announced tonight. So, yes, I think it's fair to say that I believe the RBA already anticipated some fiscal tightening when they cut by 50 basis points last week. And I won't be surprised if tonight's budget is tight enough so we could see some more cuts down the track.
Yeah, quickly, Rob, how many more cuts do you expect from the RBA this year?
Look, at the moment, we reckon there's at least one in it, but I'm looking pretty carefully at tonight's budget, and if the Treasurer does what he says, or a bit more, then I think the odds are actually that there will be two more, but maybe not straight away, because we believe that they've actually brought two rate cut, 225 normal rate cuts together in 50 basis points to make sure there was a significant drop in borrowing rates. But two more, you know, maybe as early as June if the economy continues to deteriorate for the first one, and then another 25, say, in the third quarter.
Okay, one more question for you, Rob. This is being called the make-or-break budget for Julia Gillard and her cabinet. Do you think she'll survive for the next few months at least?
Well, look, you know, I spend a lot of my days poring over statistics, Susan, and if you look at the polls at the moment, they've got a very big uphill battle there. But then again, you know, we're still about a year or more than a year, probably November next year, out from the election, and we all know that many things can happen in politics over the course of 3 or 4 months, let alone well over a year. So look, there's still time for them to claw back, and a good budget tonight might be the beginnings of a resurgence here. But right now, if you're a betting person, I think you'd be putting your money on the coalition.
Rob, it's been a pleasure speaking to you. Really enjoyed it. Rob Henderson there, Chief Economist for the Markets at National Australia Bank, joining us from Sydney.